This one change will improve your candlestick reading in your trades. We're going to keep it very simple in this video. Everyone likes to look at charts. Everyone wants to get an edge. One simple change to improve your candlestick reading. Most of you traders are familiar with higher highs, higher lows, doji stars, hammer candles, engulfing candles. All these things you probably heard time and time again. But how can you actually use these common everyday trading terms in your actual trading? So as I said, we're going to discuss one very simple change you can make to your candlestick reading that will allow you to better understand how price moves, why it moves, and how you can take advantage of that in your trading. Stop only using candlestick patterns for your entries and trades. You don't want a candlestick pattern to be your only context for why the price is moving. It's a great piece of information. There's nothing wrong with those patterns, but they're not the only reason to engage in a trade. There's two very common errors that traders make, especially when they're starting out. Now, one is you're not having a very defined set of things that you're looking for. You need to know what it is that you're looking for so that you can back test your individual strategy with that pattern and not get a bunch of false positives and see things that aren't there. Have a defined set of things you're looking for. And the second one I already hinted at. Don't use candlesticks as a standalone for entering into any kind of a trade. So you've done some homework, you've been reading the charts, that's fantastic. You want to jump right into the action? No, you can't do it. Patterns alone are not the only thing. They're just paint on the chart or paint on the screen, as we say, and it doesn't give you the entire picture of why the price is moving. Sometimes I like to have 3, 4, 5 reasons I like a stock. One of the things I talked about there is positive news, and that's a catalyst. Why is the stock moving? Why is there more eyeballs on it? That gives you more action, that gives you more volatility, it gives you more volume. So what are some catalysts out there? Fresh news. That's going to be the biggest one. Something different happening on the stock. Relative volume. You always want to make sure that if you're looking for a trade, you're at least doing regular volume on the stock. Ideally, you're having higher relative volume either on that day or in the moment that you're looking to take that trade. More eyeballs around a price area or a stock means there's more opportunity for you to get the win. Think about price action. If there's a sentiment upside or downside on that news, is it moving with that? Sometimes I might just decide not to take the trade if it's going against the sentiment. You want multiple reasons to be able to get in. We've just given you a couple there. You don't want to put all your eggs into one basket on one indicator and only a candlestick chart. We're going to use an example right here so you can understand the bigger picture and how to execute one of these trades. So let's look at Best Buy here. The company reported better than expected Q3 results. They were raising their full year and holiday quarter sales forecast. That's a positive catalyst. Good news had the shares gapping sharply higher in the pre-market the next day, and positive price action, positive news, you're looking for long setup. So if you look at the open, you want to avoid that chop. You don't get anything too obvious until things start to set up at about 10:30, and this is where I want to focus on here. You get a very clear 3-minute engulfing candle that takes out the prior 2 candles while holding a key 77.50 support area. So you got support, you get the engulfing candle, you've got the sign that you want to take that long trade, and of course it's got a positive catalyst. So you don't get chopped around, you'll wait patiently for that A+ setup. So there you go. To sum it up, we talked about why you can use candlestick patterns, but not to solely rely on them. You've got to have other reasons to get in. News catalyst, higher volume, then trade setup. Make sure you backtest so you have a defined way of engaging in that trade. That's the best way to go about it. Put in the extra work, get the extra results, and then you can make some extra coin when you're taking your trades. As always, get our free watch list so you can see what's moving. Our example would have been on that when they reported their earnings. And always tune into TraderTV.Live at 8:30. Every day the market's open, we're there.